Ripple XRP, number 3 cryptocurrency in terms of market cap value, and the only cryptocurrency ever that was more valuable than Ethereum at one point in time. Is it on its way to make that success again? Well, if you stay until the end of today's video, you will find out. And you might also find out about potential passive income opportunities for XRP holders. So let's start exploring our first topic. Sending money across borders has traditionally been expensive, slow, and riddled with intermediaries. Bank wires often take several days to clear, especially when multiple correspondent banks are involved. Fees can easily exceed $30, and the recipient may still lose additional value through currency conversion charges. That system has worked for decades, but it's inefficient. Ripple's XRP was created as a solution to this very problem. By using the XRP ledger, transactions settle in just 3 to 5 seconds, no matter where you're sending from or to. Unlike Bitcoin or Ethereum, which can experience network congestion and high gas fees, XRP is optimized for payment efficiency. Each transaction costs just a fraction of a cent. That speed and affordability is what made XRP attractive to financial institutions exploring blockchain in the mid-2010s. Ripple, the company behind XRP's main adoption push, partnered with payment providers and banks like Santander and SBI Holdings. These institutions tested RippleNet's on-demand liquidity (ODL) system, which used XRP as a bridge asset, converting one fiat currency into XRP, moving it globally in seconds, then cashing it out in the destination currency. This eliminated the need for pre-funded bank accounts in foreign countries, which tied up millions in dormant capital. For everyday users, XRP-based remittance services can enable people to send money to family abroad in near real time without requiring a traditional bank. That has major implications for migrants, freelancers, and businesses working with international clients. Still, adoption has faced headwinds. Many large institutions remain hesitant due to regulatory scrutiny surrounding XRP's legal classification, especially in the United States. So while the tech is fast, cheap, and works as intended, the real-world deployment has been slower than expected. XRP is still a strong contender in the cross-border payments race, but its lead is far from guaranteed. Next thing to cover is speed. Traditional financial systems have long required you to wait for banks to open, wait for settlements to clear, and wait for cross-border transactions to reconcile. Even in the digital age, sending money internationally through banks or services like SWIFT can take anywhere from 1 to 5 business days. And that doesn't even account for weekends, holidays, or time zone mismatches. For individuals or businesses needing immediate liquidity, this delay is more than frustrating. It can be financially damaging. XRP offers an alternative. Because it runs on a decentralized, open-source blockchain called the XRP ledger, transactions settle almost instantly. Instead of relying on multiple intermediaries to validate and process your transfer, XRP uses a unique consensus protocol that confirms payments in just 3 to 5 seconds. That speed is consistent whether you're sending $10 or $10,000, across the street or across the globe. This real-time access to your money isn't just convenient, it can be life-changing. In regions where banking infrastructure is slow or unreliable, people may be forced to wait days to access funds from abroad. XRP-powered services can remove that friction. Whether you're a small business needing immediate payment from an international client, or someone sending emergency funds to a family member in another country, XRP's fast settlement speed delivers actual utility. Several financial companies piloted this advantage through RippleNet's on-demand liquidity, ODL, designed to eliminate the need for pre-funded accounts by instantly converting between currencies using XRP. The result? Institutions could reduce capital costs, and individuals could avoid lengthy delays. Still, barriers remain. While the XRP ledger supports this technology natively, widespread use depends on adoption by financial partners, regulatory approval, and user education. Not every remittance provider or wallet service is integrated with XRP yet. In summary, XRP removes the wait from the equation, offering near-instant money access. But until adoption becomes broader and more consistent, that promise remains partially unfulfilled. Now that we've covered speed, let's talk about another area where XRP stands out: cost. Sending money, especially across borders, often comes with fees that eat into your total amount. Banks charge wire fees, currency conversion spreads, and intermediary costs. Even digital services like PayPal or Western Union apply transaction fees that can range from 1% to over 10%, depending on where you're sending and how quickly you want it to arrive. XRP was designed with efficiency in mind, and part of that efficiency includes cost. A typical XRP transaction costs a fraction of a cent, often less than 0.001 cents. That's not an exaggeration. It's simply how the XRP ledger works. Instead of relying on miners or middlemen, it uses a consensus protocol where each transaction includes a tiny fee, primarily to prevent spam, not to generate revenue. This makes a huge difference for frequent users. For example, freelancers working internationally or small businesses doing global sales often lose a noticeable percentage of income to payment processing fees. With XRP, more of that money stays with the sender and the recipient. The same holds true for charitable donations, remittances, and peer-to-peer payments in emerging markets. Another advantage is predictability. Unlike blockchains like Ethereum or Bitcoin, where network congestion can cause fees to spike, XRP's fees remain relatively stable, regardless of transaction volume. That stability makes XRP particularly appealing for use cases requiring many small payments, such as micropayments or subscription models. However, it's worth noting that low fees alone don't guarantee adoption. To benefit from XRP's cost savings, both sender and receiver need compatible wallets or platforms. And while XRP offers a strong technical foundation, it still competes with more established payment networks and region-specific tools. Still, when it comes to minimizing cost, XRP offers a compelling edge. And for many, that could mean keeping hundreds or even thousands more in their own pockets each year. Following the discussion on fees, it's time to address something even more fundamental: access. Billions of people around the world remain unbanked, either because they lack proper identification, live in rural areas, or simply can't meet the requirements to open a traditional bank account. Even more are underbanked, with limited access to reliable financial services. XRP, through its decentralized and borderless nature, offers a possible alternative. Anyone with a smartphone and an internet connection can store, send, or receive XRP without needing to go through a bank. That means no credit checks, no branch visits, no paperwork, just a crypto wallet and a bit of network bandwidth. This matters in parts of the world where banks are either absent or untrustworthy. In some countries, inflation or political instability has eroded confidence in local banking systems. For people living in these conditions, having access to a digital currency like XRP can serve as a financial lifeline. It allows individuals to participate in the global economy, accept payments from abroad, and save money in a more stable digital asset. Even in more developed regions, XRP can offer flexibility for those excluded from traditional finance. Whether it's gig workers, undocumented individuals, or people recovering from bad credit history, they can use XRP wallets to receive payments directly, bypassing high-fee services or waiting periods tied to old banking rails. That said, XRP doesn't solve everything. To fully benefit, people still need reliable internet access, tech literacy, and some degree of security awareness, especially since crypto wallets don't have customer support like banks do. And while XRP may be borderless, converting it to local fiat currencies can still be challenging in places with limited crypto infrastructure. But the core point stands. XRP can bring basic financial services to people who've been locked out of the system. It doesn't require permission, just access. And that alone opens doors for millions. Now that we've covered access, let's talk about preservation. In many parts of the world, people aren't just unbanked. They're watching their local currencies lose value every month, if not every week. Hyperinflation, currency controls, or political instability can make saving money in fiat nearly impossible. In this context, XRP offers something different, a digital asset that exists outside of any single nation's economy. Unlike national currencies, XRP isn't tied to a central bank or government. While its price does fluctuate, sometimes significantly, it can still serve as a hedge for people living under more volatile monetary systems. Instead of holding wealth in a currency that may lose 10% of its value in a month, some opt to store a portion in XRP, betting on digital stability over local chaos. This isn't just theoretical. In places like Argentina, Venezuela, or Lebanon, where capital controls limit access to US dollars, people turn to crypto as a parallel store of value. XRP's speed and low fees make it attractive for moving money quickly, especially in a crisis where time and cost matter. Of course, XRP isn't risk-free. Its price is subject to the broader crypto market, and it lacks the relative stability of fully backed stablecoins like USDC or USDT. But for those who can't access those options, or who want something more decentralized, XRP can be an appealing middle ground. It can be moved across borders, held without intermediaries, and converted where crypto infrastructure exists. As always, there are trade-offs. Using XRP requires a level of financial literacy and trust in digital systems. It doesn't guarantee value preservation, but in the right context, it might offer more stability than a collapsing national currency. And for millions of people living with inflation as a daily reality, that's not just useful, it's potentially life-changing. Now, shifting gears from personal finance to entrepreneurship, XRP can also be a powerful tool for anyone building a global-facing business. Whether you're a freelancer, digital nomad, small business owner, or content creator, receiving payments across borders is often a logistical nightmare. Banks take days, fees pile up, exchange rates eat into your margins, and in many cases, you might not even be eligible to use global payment platforms like PayPal or Stripe. This is where XRP shines. With XRP, businesses can receive payments from anywhere in the world in seconds, and for a fraction of a cent. You're not waiting for wire transfers. You're not worrying about whether the client's bank is compatible with yours. You just send and receive, directly and instantly. This opens the door for digital entrepreneurs in developing regions to participate in the global economy. If you're a developer in Nigeria, a designer in the Philippines, or a writer in Venezuela, XRP can help you get paid without needing access to the traditional financial infrastructure that many Western freelancers take for granted. Some platforms and wallets already integrate XRP for business payments and payroll. And as regulatory clarity improves in different jurisdictions, the potential for XRP-based invoicing, tipping, and subscriptions continues to grow. There's also the option of using XRP for internal operations, paying contractors, cross-border partners, or suppliers. If you run a decentralized team or work with multiple jurisdictions, it might be simpler to use one digital currency that everyone can agree on, rather than juggling banks and conversions. That said, challenges remain. Volatility, regulation, and adoption still pose hurdles for full business integration, but the core advantage stands. XRP enables faster, cheaper, more open value transfer, which is exactly what global businesses need. Next, let's shift our focus from using XRP to earn to using XRP to grow. While XRP isn't traditionally seen as a yield-generating asset like some DeFi tokens or staked coins, there are still several ways that holders might unlock passive income opportunities as the ecosystem evolves. First off, it's worth noting that XRP doesn't use a proof-of-stake consensus model, so there's no native staking mechanism like you'd find with Ethereum 2.0 or Cardano. That said, some centralized platforms have historically offered yield on XRP deposits, functioning more like high-interest savings accounts. However, this route has come under regulatory pressure in recent years, and risk management is key, especially following events like the Celsius and BlockFi collapses. Looking ahead, the XRP ledger is exploring more DeFi-light applications. Features like automated market makers, AMMs, native decentralized exchanges, DEX, and liquidity pools are slowly being tested or proposed. These could potentially offer XRP holders new ways to earn yield without relying on custodians. It's early and small-scale compared to Ethereum, but these developments show that XRP isn't standing still. There's also speculation about future use cases that could reward XRP holders directly, such as validator incentives, protocol-level rewards, or community grants. While nothing is confirmed, Ripple has signaled interest in expanding XRP's functionality beyond just payments. For institutional users, XRP may also serve a more strategic role. Holding XRP can provide liquidity for cross-border transfers or serve as collateral in interbank networks or stablecoin systems, potentially unlocking indirect returns via efficiency gains. Still, it's important to be realistic. XRP isn't currently the top choice for yield farmers or DeFi enthusiasts. Its strength lies in speed, liquidity, and enterprise adoption, not necessarily tokenomics. But as the ecosystem matures, more passive income tools could emerge that allow users to benefit simply by holding and contributing to the network's liquidity. To wrap things up, let's take a broader view and compare XRP directly with the traditional financial system it aims to challenge. While earlier topics explored individual benefits, this part brings everything together to show how XRP's core design questions the very structure of legacy finance. Traditional cross-border banking is slow, costly, and reliant on a patchwork of intermediaries. Whether it's SWIFT, correspondent banks, or clearinghouses, these systems introduce delays and fees that eat into the value of every transaction. XRP, in contrast, operates on a decentralized ledger with final settlement in just a few seconds. There are no middlemen taking a cut, and no need for pre-funded accounts sitting idle around the world. What makes XRP different from many crypto projects is that it wasn't built to destroy the banking system. It was built to improve it. Ripple's partnerships with banks and financial institutions aim to offer a bridge between traditional fiat systems and blockchain efficiency. But ironically, that same approach has also allowed individuals to opt out of those systems altogether. For people in countries with broken financial infrastructure, XRP acts as a direct value transfer method, no bank required. However, it's not without limitations. Adoption still hinges on liquidity partners, regulations, and real-world use cases. RippleNet, for example, often uses XRP behind the scenes, so users may benefit without realizing it. And despite its speed and cost advantages, many institutions are hesitant to embrace a digital asset facing ongoing legal and regulatory scrutiny. Still, XRP represents a radical departure from the financial norm. It doesn't ask permission, it doesn't rely on trust, and it doesn't wait for banking hours. Whether used by institutions or individuals, its potential to sidestep inefficiency is what continues to drive its support. And we finally made it to the very end. But let me keep you for 1 minute longer. I see you take your crypto education seriously. And education is something that separates wealthy from poor. If we agree, I would suggest you to watch one of these 2 videos you see on the screen right now. I truly hope you found this video valuable. If yes, don't forget to subscribe, leave a like, and comment your opinion down in comment section. Best of luck, and see you in my next video.